G'day guys, Scott from Fat B Trader here, just bringing you a quick video update on the euro dollar US dollar. We took a trade on this yesterday afternoon, I believe it was. Basically, took a long. It's a counter trend trade, so it's a little can be a little dicey trading counter trend. Particularly if you don't limit your risk, you can really get carved up. So I got a question from one of the guys on Profitly, Heilichen Trader, or sorry, I should say guys or girls, I'm not actually sure which. So they did ask, would love to know your thinking behind this one, the conviction to hold, how did you know? So there's a couple of things in there. Now, I assume they're asking, how did I know the trade would work out? And, why did I keep hanging on when it was such a crazy 24 hours? Look, I've been doing this for a long time. This is like my 14th or 15th year of trading, in some sort of format. So I've seen a lot of markets. I've seen a lot of charts, seen a lot of price action. When I look at this particular example, I don't actually see anything too risky, but let me explain my thought process so that you can get an understanding of what I'm actually thinking, why I'm looking at it, and hopefully you'll be able to see what I'm looking at as well. So obviously, let's just go to the US dollar. This is the US dollar index. The US dollar is just getting it's just on an absolute tear. It's made this beautiful pendant sort of formation over the last few months. So we have had this breakout of the index here, where it's pushed through, and it's basically it's kind of gone ballistic, to quote Top Gun. It's run out of a bit of gas, which is a result, I would say. I reckon this happened during NFP. It's sort of fizzled out, and that's pretty sort of in line with where the euro was or is, or has been trading post NFP. I mean, I'm pretty sure this was NFP, 6th to the 11th. It got absolutely drilled. It came back up. It tested this zone. Couldn't really do anything, and it's just basically wobbled last week until it finally was able to push up and retest this sloping downtrend line, whatever you want to call it, bull bear line, whatever. It's essentially the line of resistance that the price hasn't been able to punch through. So drilling in here to a shorter time frame, I'm sort of looking at the fundamentals in this pair at the moment, and I know that it's going down. I mean, this is one of those pairs that if you were a struggling trader and you were trying to make a good return, you would be looking for every spike or every increase in price to sell into, to essentially to ride it down once it actually starts breaking through this 106 level. Because, let's face it, you've got two countries with two opposing monetary policies. You've got the US dollar. They're going to be in a rate raising cycle very soon, and I know there's some speculation about, will they raise rates? Will they not raise rates? Look, they're going to raise rates. They're just making a big song and dance about it at the moment. For what purpose, I'm not sure. I think they're just sort of testing out how the market's going to react, because once they start jacking rates, things are going to change up a little bit. The US dollar is going to take off. And obviously the euro, their sort of quantitative easing policy is still in place. It'll probably be extended in December. So that's going to really smack the euro down. And it's going to be happening at a time when the liquidity is really, really tight, because there's not a lot of people around in December trading, and you tend to get massive moves. So it wouldn't surprise me if we, got a 200 or 300 point move on the back of a US interest rates going up and quantitative easing, more quantitative easing and more quantitative measures happening in the euro dollar. So just be really careful as we get into December, because that lack of liquidity will make things a lot more volatile. That being said, let's get back to why I took this trade. So for me, this was fairly well a no-brainer at this point. For those of you who have seen my trading strategy, one of the strategies I really like is the daily pivot strategy, and I'll put a link to that video up in the corner here if I can actually work out how to do that, and you can check that video out. It's a really good strategy. It's got a really good risk to reward ratio. The probability most of the time it works. It's a good strategy. So this particular trade was basically just taken off that strategy. I took this. I did have to, extend one of the risk criteria, because things are, I know things are volatile at the moment. There was FOMC minutes coming out yesterday. There's a lot of things you've got to factor in when, you've got news coming out. So obviously, when I took the trade, I was targeting the daily pivot, which is obviously this point here. This point here. So it's about 50 points away, basically. And, my stop was around 40 points away. The weekly, there's a weekly support zone, about $1.06. There's another support zone at about 101, I think, which is kind of going to be my next target after $1.06. There it is, 101, and I'm pretty sure there's one at 97 from back in 2003. Anyway, you get the picture. So it's pretty straightforward, basically. I mean, I'm not saying that I didn't feel bad when, things were sort of jacking around here and it was down $2,000. I'm not saying that's not the case. I mean, I felt bad, but I'm a trader. I got emotions just like everybody else. But at the end of the day, when you've set your position up and you're going for that, you're going for your profit target, which was obviously up here. You've basically got to let it do its thing. The only reason that I had a 40 or 50 point, I actually had a 50 point stop on it. It was a bit below this line, I believe, the stop loss. So it was basically a 1-to-1 trade. I just had to leave it alone. I did, I was pretty tempted, a few times in here to take it off, particularly given it was right up against this stop loss zone. There was a lot of orders here yesterday, and it didn't go through. Obviously, that was pretty concerning because it sort of fell back to mid-range prior to the FOMC minutes, and you can see there's just crap loads of volume that's gone through there, like just stacks of volume. And if I look here, what was it like? Most of that was actually, looks like, sell volume. Yep. Yeah, big time. So yeah, almost 50% more sellers at that point than there were buyers, just looking at this real directional volume. But that being said, look, once you set your trades, you sort of got to leave them alone to some degree. I know this is counter trend, and this is a counter trend trade, and it's not the easiest thing to leave alone, if that makes sense. But if you've defined your risk and you've defined your reward, then there's nothing else that you can do at that point, apart from close it early if that's what you want to do. And obviously I did close it early here because I was sitting here watching it. This is the Asian session. It was pushing through. I tweeted out around here, is it going to make it? Is it going to push through? And yep, it actually did. It pushed through and headed up. It touched that, that downsloping resistance and basically fell away. And I actually had, I actually took a buy trade in here on the small account challenge account. and we basically sold at the same point. And I did have a sell actually around about $1.07, I think it was, and it I basically, the sell triggered and I got out basically straight away because I thought, look, I think it may push through here. It hasn't done that, but end of the day, that's not really a major concern because I'm flat the pair at the moment. So look, I hope that explains it. It's a bit of a long-winded way of saying, define your risk when you look at your trade. Look at your targets, look at your stops, put them in, set them, forget them, move on, as best you can, because you can start worrying in here, and I was like, it's like $2,000 down, and I'm looking like an idiot right now, but at the end of the day, more often than not, these sort of things work out if you give them a little bit of breathing room, and you don't smother them with your own anxieties. Alright guys, I hope that all makes sense. I hope that's answered that question. If you do have any questions, please either tweet them to FatBTrader or leave a comment on Profitly or on my website fatbtrader.com. If you're interested in finding out a little bit more about the small account challenge, you can just head over to FatBTrader. You can have a look at what we're actually doing, like what trades I've been doing during the week. You can have a look at what I'm sort of thinking of, and you can see on Sunday this is basically what I was looking at. Price is kind of coming down, it's getting squeezed. I'm thinking it might squeeze up to 108.50, which I still think it may. And again, I thought there was a pretty strong level of support here, which didn't actually hold. It ended up giving away through the week, which was good because we already had shorts. So currently hold shorts from 107, 107.30. So we obviously got out of those, which you would have seen in one of the other videos. Swiss franc, I'm kind of half out of this pair. I've just added more to it, another very small position, but I currently obviously still held one from around 101.15. Again, fundamentally, same sort of thing. The fundamentals essentially drive the direction of the currency pair. If you just ignored all the rubbish, all the other rubbish, all the other news, and you just focused on what's the central bank policy, bam, you're going to get most of the direction right. It's just going to work out for you. And yeah, so you can head over there and you can check out the small account challenge. It's just where we're growing a very small account. We're going to try and grow it for as much as we can. It was originally going to go for 4 weeks, but I'm debating whether we actually run this throughout the entire next year, like grow a small account from $100, which is what we started with, to something really kind of substantial. It's already up a pretty significant amount percentage-wise and dollar-wise after 4 weeks, which is pretty cool, but you're not going to change your life with a couple of grand, so perhaps this can be an ongoing experiment to show how you can grow a very small amount of money into a much larger amount of money over a 12-month period, just to give people a realistic expectation of what they can expect. Alright guys, I hope that all makes sense. And look, like I said, if you've got any questions, you can reach me at one of those areas. Tweet me on Twitter, whatever. And we'll go from there. Alright guys, hope that all makes sense. Till next time, trade well.